Hi everyone, so today we'll do a stock analysis on Scorpio Tankers, ticker STNG, and it's a tanker shipping company. Quick disclaimer, I'm not a financial advisor, this is my own research, up to you to make your own decision. As usual, we will do a company profile, then we'll go to the fundamental analysis, then the technical analysis, and then the price catalyst, and then finish with a conclusion. So let's get started with a company profile. So Scorpio Tankers is actually a seaborne transportation of crude oil and refined petroleum products worldwide. It's been incorporated in 2009, and I think the company setup is Marshall Island, and the headquarters is in Monaco. So last they checked, they have 99 owned and leased finance tankers with 38 LR2, 47 MR, and 14 Handymax. I'll show you a bit more later what they look like. So this is a presentation from Scorpio Tankers, and I wanted to show you guys a few things that were, I think, interesting. So first of all, it's because of the headquarters in Monaco and incorporated in Marshall Island, they are not subject to US income tax, and then they have diversified customer base. So as you can see, you can recognize most of them. They're all big oil and gas producer. Then the fleet, so the thing I wanted to show is the bigger boat. That's how they look like. So they are 38, so they are called LR2. Then the MR is the medium one, and they have 47, and the Handymax is the smaller size, they have 14. So in this slide we see a bit more about what is a product tanker. So the main things that is confusing is between the product tanker and the crude tanker, and they are different way to transport. So one is happen after the oil has been extracted, then it will actually use a crude tanker that will transport it to storage or then a refinery. So refinery here, and then after that refinery will be converted into a more usable oil that will then be transported with a product tanker, which is pretty much the last steps before you can give it to someone to use the oil to put in their car or any other form of oil. And there are different ways to transport as well, and one is called a pipeline. So this is pretty much like some connections between two places, and the oil goes through underground tubes, if that's called the equivalent of pipeline, and they just transport it there, or simply with a truck, but I think that might be way less efficient. So that it is, and you have a little explanation as well on each of those boats, but I won't go into further detail because it's just gonna take too long, but you can have a look by yourself. So this slide has quite a few information that we haven't mentioned before, and one of them is the average age of the fleet. So it's around 8.9 years, and the industry age average fleet is 12.9 years. So as you can see, this company has younger fleet than average, but apparently it's the West has been in the industry for 20 years, so apparently usually the fleet is younger. So yeah, as you can see, that's a big advantage for a Scorpio tanker. And one thing that I wanted to add was the fact that I wasn't able to find anywhere in their documents, even the annual report, how many were leased and owned, because that would have been really interesting to know exactly. So one more thing as well is the fact that they have zero new build capex. So that means that they're not actually adding any boats to their fleet, and which means that, in a way, they're not expecting any growth. So it could be concerning, but at the same time, that means they're not going to spend much money to build new boats. And the thing that I wanted to show as well is the strategy. So it's reduce leverage, maintain liquidity, and return capital to shareholders. So we keep that in mind for later. But it's definitely, to me, looks like they've done it well. So I wanted to add one more slide on the industry. So I wanted to share what, like, the tankers, how they get affected by all the different things related to this industry. So it's not as simple as oil refineries or like oil and gas producer that are still cyclical, but in a way they can kind of stay stable over time. But for like tankers, they tend to be very cyclical and like in both ways and last. But if you are in the wrong side of the cycle, you get in serious trouble. So I wanted to explain a bit more like what could be impacted. So first of all is the age of the fleet, then the number of fleet worldwide. If there are too many boats, there will be a lower price to charge because there's not enough things to transport, or if there are not enough, then the price, the rate will be way higher. Then there is other things like geopolitics. If one country decide to stop like sending like kind of product to another country, or like if like like the different transportation is changed and they use oil pipeline, that could be affected too. And then there is like wars as well. Maybe those product tankers can be used for something else that they should have been used for commercial and they are not. Or there is as well pirates, so people that just take tankers for their own good. So there's so many different risks to consider, and that's what I found very difficult. But I wanted to really explain all that because it's super important. I cannot just invest without thinking about these elements. And recently, what at least has been a little bit positive is that they basically, the fleet growth hasn't been that high. So you haven't really seen that many fleets coming, and like that sounds like good and bad at the same time, because it means there might not be growth, but at the same time it shows that the rates might be stable. At least it won't actually decrease too fast. And then another thing is the new build. So they've been pretty low since 2015 and just started rising a little bit in 23. So at this space, when you compare with like 2000 to 2005, it seems to be like it's not a bad time for product tanker, at least because there are not too many vessels or fleet like in the world. So that's kind of a good thing. I hope you understand by this slide. It's a bit complicated, but I wanted to go through it. So let's continue with the fundamental. So the market cap is around 1.8 billion. So it's one of the leader as well. I forgot to mention earlier. The PE is currently at 2.7. So as you can see in there, over the past years, it's very low PE. So that means in a way that people are pricing this company very low because it's not really increasing, even though they're doing well or not. So yeah, it stays pretty low. And as you can see, fundamentals are very, very undervalued. 0.6 on price to book, to me, is very low for one of the leaders. It's almost sounds like it's a company that you find in the third world where no one's looking. So it's a bit weird, but it's you can understand it too, because it's very cyclical, very risky business. So you can understand why the valuation are that low. But still, in my opinion, they are very low and not to be completely neglected. So this is basic highlights of what's going on in the company with a few things. So like the profitability is very good, 20 like for operating margin and 50 for profit margin, return on equity as well, and asset 924. All that is fairly good. The cash is 400 for 800 million in debt. So a bit of debt, but I think they are on the right track, so I'll show you later. And free cash flow of 600 million. As you can see, for the debt, it doesn't look like much now. And then like that part as well, like the insider trading. So they have 14%. I like that. It's quite high, and I mean it's not very high, but it's pretty good. And the 75% institution. So it's pretty much only few people are actually investing in those companies, the one that knows a lot about the industry and the one that actually are in the industry. So I would say this is a good thing, and it gives as well a fairly good dividend of 5% for only a payout of 12%. This is quite amazing in terms of numbers. So I've done a few charts for you guys to show what equity does look like compared to its liabilities. So I like when the equity is pretty big and liabilities are small. Obviously everyone does, and yeah, that is looking good and sounds like a very stable company. Then this is a balance sheet for the past few years since 21 to 24, and what I notice in there, so obviously something to consider is that the assets are going down, but the main reason is because the debt is going down substantially and the equity is actually slowly rising. So that's what I like about when I see a company that does that. I really like it. I mean, if they can pretty much get rid of all the debt, this becomes only equity, and then you get pretty much a completely risk-free business, and the only thing that could be risky is the cyclicality of it, but that's already help a lot in a company, because when they don't have any debt, the risk is way lower, and when there is debt, then obviously the risk is much higher. So in terms of cyclicality like that, you want to see a business going that way. So these slides pretty much show the exact same thing. The debt is going down, the equity is slowly rising in green, and then like the cash is still like stable but still increasing slightly as well, of going from 200 to 400 million. I mean, all of this looks great to me. So in terms of revenues and net income, this company is actually shocking me in how profitable it is. So obviously that's part of the cyclicality, and you're in the wrong part of the cycle, like 2021, you get terrible numbers, but when things go right and the rate are high enough, you can see like $1.5 billion in 2022, and then like you get a net income of 600 million. So it's like 30%, like, you know, that directly in your pocket. So this is quite high, and you don't see that often in every business. So when you see that, even the like revenues are decreasing, the net income stays pretty high. Pretty amazing in that sense. I guess that's the fact that they pay back their debt while they were continuing reducing even their revenue. So if the revenue increase in the 25, 6 or 7, that might even get the company even more stable. But yeah, something to consider is that it's still decreasing the revenue, so this is a risk in terms. So even though the company is stable, the fact that they reduce the revenue, you know, it shouldn't happen for too long, right? But it's still very good. I mean, those numbers are great. Even in terms of their current assets and liabilities, we can see that in 21 it wasn't really good, and they were quite a risk. But since then, I mean, they've been doing great. Like especially 2024, the current assets is way higher than current liabilities, which is very good. So again, in here, we're seeing similar things anyway, but earning per share has been going up in the past 4 years, since 21 to 24, and the free cash flow is going up a lot. So all this is very good and healthy, and then the expenditure has been fairly low, I think, especially compared to the free cash flow. With that 21, that wasn't a good year for sure, so I have to bear that in mind that it might happen again. And the share issues, so I wasn't really understanding what happened in there, but it says that it increased, but at the same time I saw in several websites that it's actually been decreased, the shares. So let's say that's a good news if they did. So it went from nearly 60 million to now 50 million. But even if they don't, I mean, they're still very profitable business anyway. So when I look at the technical analysis, to be honest, it really doesn't look like the fundamental. It looks a little bit less exciting, and the company is pretty much in going on the downside the whole time. And then like in 2021 and 2022, it seems like they had found a bottom, then broke out of the structure, but right now plunged back right at 35. I find that pullback really strong, to be honest. When you look at how profitable the company is, it feels almost like too extreme. So might be a time to buy, I would say, but it's understandable because like the oil price and all that has been crashing down, so there's good reason why this price is there. I found these two lines in blue, the price where I'll be interested maybe to add, because I already own a few years back when it was lower. But at the moment I'm waiting for see if I add or not, depending on many things, geopolitics or not. But like honestly, I find that really hard. That one, it's interesting, but when you look at the chart, it's not as exciting to me. I just think the pullback is very big. So now let's look at the price catalyst. So I put two charts in here. So one is the crude oil that we've seen a few times in this channel. So as you can see, it's been going pretty much down since 2021 or 2, like in 2022, yeah. And so the rates in under the second chart is so the product tanker rates, and as you can see around that 22, 3 and 4, that's when actually the product tanker did fairly well, but not in 2021, and yeah, like 2020 was maybe a bit, but that was very quick high. So I found it's good that they stay elevated, so this is good. So I'm hoping that we are the equivalent of that 2001 cycle, where we might stay like that for another 5 years. And that's the whole idea behind that, like investing in that stock, is to bet on the commodity boom and make sure that the rate stays elevated during the time of the oil pushing higher, and that's the last cycle. So when I say in here, we were here, by the way, I think I made a mistake, and we are at the moment here if I had to compare. So obviously we have no idea, it could drop, it could do whatever, but it looks similar to the last chart, and that would means that potentially we might be in an uptrend after that. So let's hope I'm right. That's all I can say. No one knows, but it just looks similar. And if that happens, I suspect this is what we will see in the rates, which means I'm hoping to keep that stock for a few more years, and hopefully it will pay enough dividends or like produce like enough growth to be able to increase those prices. So that's how I see, and I want to say there's nothing guaranteed, we have no idea, but this is what I'm seeing, and that's why it's very hard to explain the product tanker thing. There's so many things to consider and look at. So as a conclusion for this company, Scorpio Tanker, I would say that the fundamental looks pretty amazing. It's a cyclical business, so it could change very quickly, but the debt has been reduced substantially, which will definitely lower the risk even if they had 1 or 2 bad years. They've been buying back, so this one is to be confirmed, but if they did, it looks like the number of shares going down, which is good. And then like yeah, it seems like the rates are high enough at the moment to keep them profitable, so anything can change, but I'm surprised that actually it happened for a few years like this. So good news. On the risk, I would say that the charts look literally all over the place. It's very hard to know where it could go, and I think if you forget the fundamental, I would really don't want to trade it, to be honest. And then the risk, the second one is the oil prices. So to make sure that the rate stays high, I still think that the oil prices needs to start rising, and make sure that we make sure that the company grow. Because if oil price really shoot and go much higher, it would definitely help. That's it for today. I hope you enjoyed the video, and see you in the next video.